Hey, ever feel like the world of investing is speaking a different language? Like there's this secret club with velvet ropes and complicated handshakes, and you're just standing outside wondering if you'll ever get in? You're not alone. For years, the traditional image of investing involved pinstripe suits, shouting on a trading floor, and jargon that could make your head spin. But the landscape is changing. Now, we have apps popping up that promise to make investing accessible to everyone, right from your phone. And two names you hear a lot in this space are Acorns and traditional brokerage firms. So, the big question is, which one is actually best for you? Is Acorns, with its sleek interface and promise of effortless investing, the way to go? Or should you stick with the more established world of traditional brokerage firms, with their wider range of options and sophisticated tools? That's exactly what we're going to break down today. We're not going to get bogged down in overly technical terms. Instead, we're going to look at the real differences, the pros and cons of each, and help you figure out which path aligns best with your financial goals and comfort level. Let's start by understanding what each of these actually is. Acorns, at its core, is a micro-investing platform. Think of it as the app that rounds up your everyday purchases to the nearest dollar and invests that spare change for you. Bought a coffee for $3.75? Acorns will take that extra 25 cents and put it into a diversified portfolio of ETFs, exchange-traded funds. It's designed to be incredibly easy and almost passive. You link your bank accounts and credit cards, set up your investment goals and risk tolerance, and Acorns takes care of the rest. They offer different subscription tiers, unlocking features like retirement accounts, Acorns Later, checking accounts, Acorns Checking, and educational content. The beauty of Acorns lies in its simplicity and low barrier to entry. You can literally start investing with just a few cents. Traditional brokerage firms, on the other hand, are the more established players in the investment world. Think of names like Fidelity, Charles Schwab, Vanguard, and even newer online brokers like Robinhood and Webull. These platforms offer a much wider array of investment options beyond just ETFs. You can typically trade individual stocks, bonds, mutual funds, options, and even more complex instruments. They often provide extensive research tools, educational resources, and sometimes even personalized financial advice. While some traditional brokers have also lowered their barriers to entry with no-commission trading and fractional shares, they generally cater to individuals who are more actively involved in managing their investments or who have larger sums to invest. Now that we have a basic understanding, let's dive into some key areas to compare them directly. Minimum investment. This is a huge factor for many beginners. Acorns shines here. You can literally start investing with as little as the spare change from your purchases. Some of their account types might have a small initial funding requirement, but the core concept revolves around micro-investing. Traditional brokerage firms used to have much higher minimums, but many have now eliminated or significantly lowered them, especially for opening an account or investing in fractional shares. However, investing in certain mutual funds or specific amounts of individual stocks might still require larger initial outlays. Ease of use. Acorns is designed for absolute beginners. The interface is incredibly intuitive and user-friendly. Setting up an account is quick and straightforward, and the automated roundups make investing feel almost effortless. Traditional brokerage platforms, while becoming more user-friendly, often have more complex interfaces with a wider range of features and tools, which can be overwhelming for someone just starting out. Investment options. This is where traditional brokerage firms have a significant advantage. Acorns primarily offers a selection of pre-built ETF portfolios based on your risk tolerance. While these portfolios are diversified and professionally managed, your control over specific investments is limited. Traditional brokers, on the other hand, provide access to a vast universe of investment options, allowing you to pick individual stocks, bonds, and other securities based on your own research and investment strategy. Fees. Acorns typically charges a monthly subscription fee, which can range from a few dollars to a bit more depending on the features you access. For small account balances, these fees can eat into your returns more significantly on a percentage basis compared to traditional brokers. Many traditional brokers have moved to a commission-free model for trading stocks and ETFs, which can be a significant cost saving, especially for active traders. However, they might still charge fees for certain transactions, mutual funds, or advisory services. It's crucial to understand the fee structure of both options based on your investment amount and activity level. Automation. Acorns' core strength lies in its automation. The roundup feature and automatic investments make it incredibly easy to consistently invest without actively thinking about it. Many traditional brokers also offer features like automatic transfers and dividend reinvestment, but the fundamental approach often requires more active decision-making on what and when to buy. Educational resources and support. Traditional brokerage firms often provide a wealth of educational materials, research tools, and sometimes even access to financial advisors. This can be invaluable for learning about investing and developing a more sophisticated investment strategy. Acorns offers some educational content within its app, but it's generally more focused on basic concepts and less comprehensive than what you'd find with a traditional broker. Account types. Both Acorns and traditional brokers offer various account types, including taxable brokerage accounts, IRAs, individual retirement accounts, and sometimes other specialized accounts. The availability and specific features might vary between platforms. Acorns has expanded its offerings with Acorns Later, retirement accounts, and Acorns Checking, aiming to be a more comprehensive financial platform. Control and customization. If you want more control over your investment decisions and the ability to customize your portfolio with specific assets, a traditional brokerage firm is likely a better fit. Acorns offers limited customization within its pre-built portfolios. Growth potential and sophistication. As your investment knowledge and capital grow, you might find the limitations of Acorns' investment options and tools restrictive. Traditional brokerage firms offer the scalability and sophistication needed for more complex investment strategies and larger portfolios. So, who wins? Well, there's no single best answer. It truly depends on your individual circumstances, financial goals, and comfort level. Acorns might be a great fit if you are completely new to investing and want a simple, hands-off approach. Want to start investing with small amounts of money and build the habit. Appreciate the automated roundup feature and the effortless way it invests your spare change. Are looking for a user-friendly interface and a straightforward investment experience. Are comfortable with a limited selection of pre-built ETF portfolios. With that said, thanks for watching, and until next time.